problem with looking at our financials is it's oftentimes really hard to tell if we're actually doing better or worse. Oftentimes we as entrepreneurs will just look at the top line revenue and say, is it better than last year? And if we've had a little bit of financial training, we might look at the bottom line and say, is it better or worse? So for example, this is your typical income statement, and you'll get this and say, well, if this was year 2002 and this is 2001, which is like 20 years ago, but we'll just roll with it as a sample. 1.1 million is worse than 1.3 million. So 01 must have been a better year than 02. Is that really true though? Is that really true? It's tough to know because maybe I actually kept more money, but that can be tough to tell. And even if I do think that one year is better than the other, how can I unearth? How can I figure out like the X marks the spot on the treasure map of where I can go dig to reduce the parts that were bad and improve the parts that were good, so that I'm kind of getting rid of the bad, doing more of the good, so that this year and the year after just gets better and better and better, instead of us just focusing on revenue and who knows, possibly selling ourselves right into bankruptcy, which happens very often when companies sell more and more, keep less and less, and they've got nothing left and they go out of business. So how can we sell more and more, but keep more and more and be more and more financially abundant? A lot of that comes down to knowing where in your business the opportunities lie. So how do we do that? Well, one of the tools I've developed, it's a concept called building your profit factory. So that's why I call the company Profit Factory. And so every business has these three engine rooms that sit inside of your business. So if this is your profit factory, then from there, every business on the planet, from the smallest solopreneur up to Apple, all have some part of their business that's about acquiring customers. Then there's another part of the business about production. And the third, I just call it mothership, which ends up typically being like finance, legal, human resource, like that kind of thing. And so if we've got these three engine rooms that make up my profit factory, I also have a series of small engines in each of my engine rooms. And so inside each of these engine rooms, these engines might be things like, for example, if you speak, your signature talk would be one of the engines that drives acquisition. You probably have a way of getting on stages. Maybe you do networking. Maybe you've got a funnel that you've built with Facebook ads or a automated webinar or something. So there's all these little engines inside our business that help us to acquire customers. Likewise, for production, you're going to have certain things that happen in your business that help you with production. So maybe there's like onboarding clients, maybe there's customer service, and on and on. And then over here in Mothership, we might have areas like finance, legal, right? Onboarding new teammates, that kind of thing. And so really our business is just a collection of engines. Our engines are going to be driven by engineers, so different people who are going to drive these engines. So that's our staff. And then from there, we're also going to have metrics that we're looking at. Ideally, I call these the dials of our profit factory. And we can really run our business without having to micromanage things if we've done a good job of identifying the right dials, the right engineers, and then also the right engines. And that really is your profit factory. As CEOs, our job is just to build the right profit factory, given the market that we want to serve and the environment that we're operating in. Obviously, if you're a restaurant and COVID hits, you got to make a change, right? So that's what I mean by operating well in the environment. So if every business has at least three engine rooms, it's these three here: acquisition, production, and mothership. Then how can we get line of sight? How can we see what's going on with the money of each and the performance of each? Well, theoretically, your financials should give you a really nice view of that. But the problem is that financials are typically organized by your accountant for filing your taxes. And there's nothing wrong with that. That's one of the important roles that your bookkeeper and accountant play, is preparing your financials for the authorities. That's got to happen, or else you end up in big trouble. Where we really, really miss the opportunity, though, as entrepreneurs, is to get the CEO level insight to be able to make changes in our business. So, we oftentimes call this the CEO cycle, right? Where, us as the CEO, we're going to make important decisions. Those decisions are going to lead to action. Action leads to transaction. And then from there, guess what? Now your bookkeeper is going to capture all these transactions, is going to prepare taxes, is going to prepare financials. And for a lot of entrepreneurs, that's where it ends. And this is just this like annoyance that we have to put up with every single year. Well, if you understand how to use your numbers, what your bookkeeper prepares can actually become this incredible source of insight and opportunity that is probably hiding in plain sight. And from there, that can come around and inform your decisions. It's impossible to make financial progress if you're using marketing tools. If you want to make financial progress, you have to use financial tools and financial skills, right? And that's what we're here to teach you. So how can we take our financials and make them incredibly easy to understand and incredibly revealing about where the big opportunities are sitting in our business? And this is where our Franciscan income statement comes in. So the Franciscan income statement is something that I invented. It's where we take the financials of a company, and we're really just copying what your bookkeeper and accountant have sent you and pasting it into a different view, if you will. So we bring it over into Google Sheets, or if you must, you can use Excel. I prefer Google Sheets. And from there, we're just putting the data in like kind of a cool spreadsheet that I've developed that, students of ours use all the time. So I'm going to share my screen once again here to show you what a Franciscan income statement looks like. So sharing screen in 3, 2, and 1, and off we go. So each month here, this is, we've got total revenue, right? We've got expenses, and we've got net profit down at the bottom right here. So net income. So this company had 50,893 in revenue and had 41,284 in net income. So bottom line profit. And at first glance, you might say, well, this just looks like a blur of numbers. But actually, if you look a little bit more closely, you'll see that we actually have the exact same 3 engine rooms that we were talking about before. We have acquisition, which is this whole area up here, right? So all of this is acquisition. What money did we spend on acquiring customers? Then we have fulfillment. What money did we spend on making customers happy? Then we have a whole other area that is what expenses have we incurred that could be for acquisition, could be for fulfillment, could be for mothership. And then lastly, what expenses are here in mothership. And actually here we have acquisition again. So we're really just subdividing what our accountant has given us into the 3 engine rooms: acquisition, fulfillment, mothership, or variable if some expenses span all 3 areas. So for example, if you give your employees gifts, and you're giving it to your whole staff, some of your staff could be acquisition, some could be fulfillment, some could be mothership. So that's why there's this variable category. So from there, I can now see of all the money that I've spent, what percentage of it is going to acquisition versus fulfillment versus mothership. And I can now drill down and say, okay, well, this seems to be the best month because I had $67,000 worth of revenue. But if I come down and I look at net profit, I might discover, well, hold on, right here, January is actually a far better month. I kept 81% of my revenue as net profit, whereas, that big month in revenue was only 61%, right? And so I can say, why is that? What happened? And there I can go and look at, okay, in terms of all the acquisition, fulfillment, and mothership expenses that I made, where was I really effective? Where did my money really count, really produce a nice return for me? And where was it kind of a dud, where I tried to spend some money and it just didn't work out? So the Franciscan income statement shows you how you're doing in all 3 engine rooms really powerfully, so that ultimately you're not just making more, but actually keeping more down here at the bottom line. What's even better is that once you have a Franciscan income statement set up, it can actually show you really important KPIs. And you can drive your own KPIs if you want to customize this. I would say at the basics, we can take a look here and say, all right, and if I take all the acquisition expenses that I made, and you could think of them as investments if you wanted to, all the fulfillment, all the mothership, what kind of return am I getting? So in the same way in our personal finance, we think of return on investment. We want to get a positive double-digit return on investment, triple digit if we can swing it. Am I getting the same kind of investment return in my business? So here we can see that in January of 2020, I put a total of $2,592 into acquisition. And then from there, I also put $4,770 into fulfillment. And I also put $2,245 into mothership. If I take my total profit and I divide it by those numbers, I can find out what was my return. So I can see my return on acquisition was 1,592%. And I can see in other months, it was like negative 18% or negative 101%. What was happening there? And I can then go back. I can say, what campaigns did we run? Who did I hire? What training expenses did we incur? Did I have to hire professionals like accountants and lawyers? What had to happen? What was happening through the year that allows me to optimize acquisition, optimize fulfillment, and optimize mothership? You can compare this to having a marketing funnel. If you've got a marketing funnel and there's 5 different conversion points, right? How many people see your ad? And of those people, how many convert by clicking? And those who click, how many actually register for your webinar? And how many actually show up for your webinar? And how many stay to the end? And how many buy? Those are all conversion points. It's the same thing with your financials. Think of each of these as a conversion point. If you can improve your acquisition by 10%, improve your fulfillment by 10%, improve your mothership by 10%, you're now compounding how much your profit can grow. In the same way, when you think about marketing, if more people click, more people register, more people show up, et cetera, that compounds as well. Very, very powerful. Another really important metric is labor, to say, what's my return on labor? And so if I spend $4,800 on labor, how much net profit did that generate versus 25K versus 29K? What months was I the most effective at deploying my people so they can generate the greatest profit for me? So these are some of the things that become possible when you start using a Franciscan income statement, which is like next level beyond whatever your bookkeeper account would ever send you in a traditional income statement. And I do encourage you to join us for our training on the Franciscan income statement, where you'll be able to learn how to build your own, and you'll even get a copy of our template, the one that I showed you on the screen today. We'll see you soon.